How's it going, everyone? It's Sam. Today I'm talking about my next big SPAC play because we have been right about so many companies recently, and this one is one that is kind of well known. It got a lot of hype back in July, but no one's really talking about it now. But I think it offers a really significant opportunity, and I'm going to be putting in a position that is bigger than I've been doing recently in a lot of these SPACs. So if you guys like this, please hit the like button. I really appreciate it. Also, if you don't mind hitting subscribe, we're on the road to 35,000 subscribers, maybe 40,000 by the time you see this. So I really appreciate that. We're growing quickly. Also, if you want to know exactly what I buy and when I buy it and when I sell it and all that, if you want to know exactly how much I'm putting into this company today, you can hit the link down below to Patreon, join the channel there, and you can get access to all my buys and sells. You're also going to be in a group with about 500 other investors, so it's a really good group community. If I don't know something, they probably do. And if you want 4 free stocks through WeBull, definitely check out the link down below. It ends before December, so definitely hit that button down there. Get those 4 free stocks. Just deposit $100. So if you guys don't mind doing that, I really appreciate that too. So let's take a look at some of the companies that we have been right about recently with these SPACs. And I'm going to explain something about SPACs that you might not know. So first of all, we pointed out Apex and we bought it, I think right around $11 a share, and it moved up significantly. I mean, 40% the other day. We also pointed out NBAC, which actually moved down a little bit Friday, but we sold out of a good position, a good part of our position at 86% up. So it moved 86% in one day, sold out right at the peak. Literally, we could not have timed it better. We sold half of it. We also talked about CIAC at $13.50. It ran all the way up. We sold about half, or I sold about half, right? Over 100%, and then kept the other half just to let it ride. So all my profit is in there, but then all my initial principal is out. And then we have RMG, which is starting to run up. You can see here, it's kind of like APXT in that it's just starting to get some clout now. People are just starting to hear about it. And there are a lot of these companies right now, a lot of SPACs that are running up on news of these mergers. I mean, I don't think I've seen one that has stayed about the same after they start to announce a merger and people start to hear about it. So the company that we're looking at today is Bill Ackman SPAC, or Ackman SPAC. You can see here, it's Pershing Square Tontine Holdings, and it is $25 a share. Now you might be saying that's really expensive, but the thing is, most SPACs start at $10 a share. This one starts at $20 a share. So this would be equivalent of about $12.50 compared to all these other SPACs that we talked about. And it's starting to get a little upward momentum. You can see here it's up a little bit recently, but not too much because they have not announced who they're going to be merging with. Now, the thing that's interesting about Pershing is the fact that it's run by Bill Ackman, which is one of the best known investors, billionaire investor. He runs a really big fund right now with over $11 billion in assets, really well known in the finance community. And they were able to raise over $4 billion for this. So that is a lot of money. They are looking at a different approach than a lot of these other SPACs. And the thing with SPACs that a lot of people don't realize is that they have a limited downside potential. So with SPACs, they're special purpose acquisition companies, they're blank check companies to invest in private companies. They can only fall down to whatever they started at, because otherwise, if they don't actually find a company to merge with, they give you the initial, let's say for this company, it would be $20 back. So on the maximum downside potential, it's 25% right now at $25 a share. Now, I am planning on taking a large position in this. The problem with SPACs is if they go 2 years without figuring out a company to merge with, then you just get the money back and then it falls down. So again, 25% downside maximum. But the thing is, almost every SPAC finds someone to merge with, especially a company like this. I mean, they have so much money there. I don't think they want to give back their $4 billion. So Pershing is an interesting one because it's run by someone that has such good management, right, Bill? So that is something I'm looking at. Also, there's so much hype in the space. If they can find someone that's in the tech sector, let's say, that is going to be huge. I think that would push the stock up massively between all the other catalysts. The fact that it's someone that's very famous, the fact that it's the largest SPAC, the fact that the hype is there for the sector in growth and in EV and in SPACs. there is a lot of upside potential. Now, I'm saying that this could go up, as soon as they announce it, maybe 20, 30, 50%, especially as more and more people hear about it. There's such a lot of coverage on this company already, and we haven't heard much recently. So I think that could really send the stock up. Now, something that just happened recently was that a billionaire investor who's named the next Warren Buffett, or kind of dubbed the next Warren Buffett because he is a value investor, took a $400 million bet on this SPAC. I mean, that is a tenth of the company, right? That's insane. That's a tenth of this blank check company. Now, this gives me some confidence because a billionaire investor is investing almost $500 million in pretty much just investing in Bill. So he is taking a big bet that Bill's going to do a good job of picking a good company. They do have some information on what they're looking at. There have been hints at a couple different companies. So they've been talking about how they might merge with Airbnb or Bloomberg, or even I've heard Chick-fil-A. They aren't clear on what they're going to buy yet, or they haven't told us. I think that probably not Airbnb because of the fact that it's been a tough year, but maybe they can get a nice discount. So that might be something that's worth considering too. It's kind of a mix between a hospitality and a tech company because they don't do any of the hospitality really. They're just the middleman, but they're talking about too how they want to invest in a mature unicorn. So a small amount in something that has a high amount of cash flow is very predictable, so that might weed out Airbnb. But something that's very predictable, has nice cash flow, is pretty consistent, has a high barrier of entry into the business, so not something that some competitor can just start up. And he wants to only buy a portion of it. So he doesn't want to buy 100%. You can see here, if you're selling 100% of your company, you want the last dollar. If you're selling 20% of your company in a merger, which enables you to take your company public, but you keep control, you're much less price sensitive. So he's hoping to get a little bit of a discount in that way because this company is just going to use the money to then fund extra growth. So they obviously, whoever they're merging with, will want this money for something. I mean, they're not just putting it in their account just to sit there. They want to take this money to help expand. So they are hoping to get a pretty good value because let's say they inject $4 billion into it. That would be much more beneficial to one of these companies if they can take that and make it $8 billion than just taking, let's say, $1 billion or something from another SPAC or $500 million. A lot of them are 400 to 600 million, these blank check companies, but this offers a lot of upside. It offers a lot of potential runway. It could help that company expand their revenue and expand their bottom line a lot. I've thought about this before too with other companies. I like when they only buy a small portion of the company, because really the owners of the company aren't trying to sell out. They're not trying to get out of the company. They're just trying to look for a little capital injection, and they're not willing to part with their shares or their ownership because they think the company has a good outlook. I would be really worried if this company was just buying out the other company completely. I mean, that would tell me that the existing shareholders don't really see much value in it anymore. Unless it's just such a high number that it's just stupid, I think that wouldn't really make sense. So I really like Pershing Square Tontine Holdings. It's under the ticker PSTH. If you guys want to use my link to get WeBull, you can trade post-market and pre-market trading hours. So on Monday, you could get in at 4 a.m. Eastern time. I think it's really valuable. Again, I apologize. It's only for U.S. residents as of now. But if you guys like that, you can definitely check out the link below. And if you want to know exactly what I'm buying and what I'm selling, like this company, you can know how much I am buying of it down below in the description. Hit on the link to Patreon. Join our ever-growing group of investors. I really appreciate that. And let's see where it goes. I think this could go up to, I don't know, like I said, 30, 40% once they announce and people start hearing about it, and continue to ride up. And I say 30 to 40%, but if it's a company that is in the tech space or EV space or charging space or anything like that, we've seen ChargePoint. That was another one that we hadn't hit on in the beginning. We talked about ChargePoint, and it went up so much. We're up over 100% on it because we bought in when it was $16.50 a share, and it's been up and down a little bit recently. Some people sold out, but we held on. So we're up huge on this one too. If they can take something public like ChargePoint, I mean, this was a $10 company, right? This was $10 for a long time. Now it's up 260%. If they can do that, this is going to be huge. Again, it's a little bit more difficult because this is a very large company that they're buying part of, $10 to $15 billion company. So maybe 40-50% max, but really they're looking for just a small portion of it. So they're limited in the amount of companies that they can work with, especially because they are looking for some cash flow. But it will be interesting to see. Again, some risk, so do your own research, but definitely check this company out. Thank you guys so much for watching. I appreciate it. Let me know what you think about this company down below. And if you want to see another company that I am buying, this is another EV company, definitely check out this video here. Thanks.